Welcome back to Wealth-ology. For today's video, we will be going to talk about Warren Buffett explains how not to lose money in the stock market. Let's get started. Don't lose money when investing. According to Warren Buffett, never forget rule number 1 is the second rule. But the obvious question that should be asked in response to Warren Buffett's statement is, how can we avoid losing money? Now that I've managed to delve into the Warren Buffett's archives, he outlines a few fundamental rules that he adheres to. Number 1. Don't speculate. Buffett said, but it's that old story of what the wise man does in the beginning, the fool does in the end. And with many asset class that has a big move that's based initially on fundamentals, is going to attract speculative participation at some point, and that speculative participation can become dominant as time goes by. And famous case always being tulip bulbs. I mean, tulips may have been more attractive than dandelions or something, so people paid a little more money for him. But once a price history develops, that causes people to start looking at an asset that they never looked at before, and to get envious. Number 2. Don't invest purely based around someone else's opinion. Buffett said, the fact that they're because he saw this early and so on that takes over. And my guess is that we're seeing some of that in the commodity area, and of course I think we've seen some of it in the housing area too. How far it goes? You never know. I mean, it's just some things go on to just unbelievable heights, and then silver went back in there. That was manipulation to some extent, but it got up to $50 an ounce very briefly back in the early 80s. But the eyes of the world never looked at silver when it was $1.60 or some $1.30 back in the 60s, Everybody in the world was looking at it, and some were shorting and some were buy, but because it becomes a speculative football. And my guess is that an awful lot of the activity in something like copper now is speculative on both sides of the market. And if it goes to $5 a pound, who knows, but you're looking at a market that's responding more to speculative forces than the fundamental forces in my view, Charlie. Number 3. Stay away from things you don't understand. Charlie said, well, I think we've demonstrated a little we know about commodity prices by our very skillful operations and silver. Buffett said, I think you can change that from our day. It's mine actually. I bought it very early. I sold it very early. Other than that, everything I did was perfect. I mean, we managed to minimize things there with great efficiency. Or I managed to do Charlie didn't everything do that. I was the silver king there for a while. Wait, we didn't make few dollars on it. But we're not good at the game of when it gets into the speculative area figuring out how far a speculative boom will go. Number 4. Focus on the fundamentals. Buffett said, if the fundamentals are attractive, we think we're getting a lot of our money buying equities or whatever it may be. We'll make some money. We may not make as much money remotely as much as somebody who has, plays out the last 30 days or 30 weeks of a real wild orgy. I mean, these days they tend to be the wildest toward the end. But that gets back to the question. Cinderella of the ball? I mean, if you're there, you're having a wonderful time and the punch bowl is flowing and the dance partners are getting prettier all the time. And at midnight, if it's going to turn to pumpkins and mice, and you look around the room and you think just one more dance, one more good looking guy, one more glass of champagne, and you think you're going to get out of there at midnight, and of course, everybody else thinks they're gonna get out there at midnight too. And in the end, it does turn to pumpkins and mice. And in this game, as I've said, Adam Smith said it many years ago. Fellow, I'm Jerry Goodman, wrote under the pseudonym of Adam Smith says, the problem with that particular dance for Cinderella is that there are no clocks on the wall. In the markets, for talking copper now, if you're talking internet stocks in 1999, if you're talking uranium stocks in the 1950s, there are no clocks on the wall, and the party does get to be more fun, Minute after minute, hour after hour, and then it does turn to pumpkins and mice. And it's true that people often invest based only on their emotions rather than considering the facts, which encourages a buy high, sell low mentality. which is very disappointing to see because, of course, when stocks drop and when they crash as they are right now, we should be going to exact opposite. Since many of them are being sold below their true value, we should be buying rather than selling. You know, it makes me think of a famous Warren Buffett quote, which is, "Be fearful when others are greedy, and be greedy when others are fearful." When the stock market is pumping to all-time highs, we need to be cautious. But when the stocks are collapsing and selling for extremely low prices, that's when we need to put our money to work. Invest in reliable, admirable firms at those times. And you know you won't lose money in the long run. However, depositing money in the bank is another issue that is resulting in consumers losing money. As many of you are probably aware, there are currently no interest rate in the United States. Now, if there were no such thing as inflation, everything would be okay with your money. As you can see, inflation results in an overall rise in prices and decrease in the purchasing power of money. You see, in preparation for the 2020 crisis, the Fed has been producing trillions of dollars. It devalues the current money and the system, which means that keeping it in the bank really costs you money. Let me give you an example. Let's say I gave 4 people $1 million. One of whom had an expensive ratio of 1%, the others 1.5%, the others 2%, and the last 2.5%. The person with the 1% expense ratio made $4.25 million, while the person with 2.5% expense ratio made $2.59 million, which is a $1.5 million loss. Now, we would regret that these are one of the biggest killers to your returns that there is. Warren Buffett always harps on about avoiding fees because of this. Because fees cause you to lose money and kill returns. Because of this, you should either seek out low-fee index funds or buy individual equities like Warren Buffett. Understanding stock market cycles is the final element necessary for avoiding losses in the stock market. A bull market typically lasts 10 years or less on average throughout history. In the early stages, people are cautious while investing. Next comes to the attention, which is followed by enthusiasm and avarice before things inevitably tumble as they did in 2020. The optimum moment to invest is not at the height of greed or at the height of ecstasy. But you must understand that the market does go through cycles and things will eventually build up again. However, when stock ownership is unpopular, that is when fear is at its worst. The greatest and cheapest bargains are available at that time. So folks, let's take Warren Buffett's advice and steer clear of speculating as much as possible. Let's make investment in well-run companies that we are familiar with. The most essential thing is to remain calm when things are bad. If we panic, we will lose money in the long run. You see, if you look back through the history, the wisest and smartest investors were all together at the height of the market crashes. Because these are the times will provide you those large returns over in the long run. If you had made an investment during the peak of the technological bubble bust, you would have received a wonderful 80% return in a short period of time. Investing at the height of the housing bubble burst is an even better example. Your return would have been over 250%. Your money has nearly tripled in size. Which aspect of this subject have you found to be very useful? Please let me know in the comment section below. And if you like this video, please give it a thumbs up, turn on the notification bell, and subscribe to our channel for more. Thank you for taking the time to watch. Stay tuned for our next video. Bye!